Chat with Traders, episode 143, is brought to you by our friends at TradeStation. TradeStation are a trusted online brokerage geared towards active traders and my own personal broker of choice. If you appreciate a good deal, you'll appreciate TradeStation's simplified pricing. $5 per stock trade or 1 cent per share, $1.50 per futures contract, no software fees, free real-time data, and free premium tools. Open an account today at tradestation.com/traders.
This is your key to the minds of trading's elite performers, those who profit in relentless markets. Here on the Chat with Traders podcast, you'll hear about the skill sets and tactics that lead winning traders to win, so you can level up and become a better trader. Here's your host, Aaron Fifield.
Hey crew, what's up? Thanks very much for joining me. Coming up on this episode, I'm excited to share with you a first-hand account from someone who's been on a wild ride through the US justice system. Michael Kimelman is my guest. He was convicted and served time for insider trading. Throughout our conversation, you'll hear everything from how Michael ignited his prop trading career at the renowned firm DayTech Securities and the bizarre antics which took place there. The moment the FBI stormed his home in a pre-dawn raid, and what happened to his $250 million hedge fund over the few hours which followed. How his trial played out, the twists and the revelation of a rogue judge. And you'll also hear about what life was like behind bars. But before you write Michael off as a bad man, please listen to his recollection of these events, as I'm sure some parts of his story will legitimately shock you. If you get through this episode and you're curious to know more, then you might be pleased to know Michael has actually written a book. The title, Confessions of a Wall Street Insider, a cautionary tale of rats, feds, and banksters. I've set up a direct link to make your life easier. So if you go to chatwithtraders.com/confessions, that will take you straight to the book on Amazon. chatwithtraders.com/confessions. I'd also like to point out some of the events Michael talks about during this episode overlap with the events of ex-Galleon trader Tony Duff spoke about on episode 106. So be sure to check out that episode as well if you haven't already. chatwithtraders.com/106. Right, on with the show. Here is my conversation with Michael Kimelman.
Did I send you a copy of the book, or did James send you?
You did.
Okay.
Yeah. I asked for it. You sent me through a PDF, and I was skimming through it yesterday afternoon, actually, and that's all I intend to do was just skim through it. But I found myself reading like quite a few pages.
All right, good.
It was really good, man. But then I didn't want to read too much of it because I wanted, I didn't want to know everything you were about to say.
Questions and right.
Exactly. So anyway, let's start right at the get go. You didn't start out as a trader. If I'm not mistaken, you were a lawyer initially. Is that right?
I was. I took a job out of law school. I went to law school at USC, which is in Los Angeles, and did very well in school, and sort of had my pick of jobs, and took a job with Sullivan and Cromwell, which is one of the bigger New York firms out there with a very storied past, and wanted to be in the New York office because obviously that's where the center of power was, or where most of the deal action was. And being an M&A lawyer, you wanted to see deals. So I moved to New York, practiced law for about 2.5 years. And then, it was the late 90s. And back then, there were a couple of pretty exciting things going on, both in technology, obviously, and in finance. And it seemed like being a lawyer was not the best place to be. So I lateraled into finance and into trading, and then really never looked back.
So how did you get into finance and trading? Like, where'd you go from being a lawyer?
Sure. So I had always been interested in trading and then followed the stock market. I actually traded my way through law school and did pretty well with a simple, I think it was either an E-Trade account or one of those basic accounts. So I was always watching the markets. And then I remember I think it was 1998 when I was at Sullivan and Cromwell working on a deal. There was the Thai baht crisis in 98. And I remember, stocks getting smashed and buying Cisco, through an online account. And then something like a day later, it had recovered, and I made something like $12,000 or $13,000 in that one trade. And then thought about it, and I was like, that's what I make in a month here, working 100 hours a week. So I had to work 400 hours to get that same return on capital, doing work that I thought was a lot less interesting. So, I began trading a little bit while I was at the firm, and they even had to restructure the compliance a little bit because you were supposed to hold it for a certain amount of time, and I convinced them, to cut that 30-day hold period to, I think, a 48-hour hold period or something like that. But either way, I knew my time as a lawyer was going to be short because I had caught the trading bug. And I then began interviewing for a couple of risk arbitrage jobs, which I thought I was well suited to with my M&A background and sort of, handicapping and analytical abilities. Got an offer from Bear Stearns, wanted to get an offer from Goldman. And then, as I write in the book, I went to visit my friend Randy, who was at a prop trading firm at the time. And I remember walking into his office, and it looked like, it looked like a bargain basement hurricane had hit it. It was broken up desks and very low grade furniture. But then I looked at Randy's P&L and a couple of the other traders around him, and these guys were making, tens of thousands a day, and the good ones were making, well into six figures. And it was really just a very smart group of Ivy League trained, mostly athletes. So you had that competitive aspect to them. But these guys were, tackling the markets and had big sort of banks and big pads that they were able to trade. And so I didn't even want to wait around and enter the world of risk arbitrage. I went straight for the proprietary trading world.
And what was that firm? Is this DayTech?
That was DayTech, which later changed its name, but it was DayTech back then. They ended up selling it, I think, partially they ended up selling the software to Ameritrade for a pretty outrageous number. And then it got swallowed by another firm, which was Schoenfeld, which is one of the bigger proprietary trading firms out there. And I was there for about 3 years or so.
Okay. Let's spend a little bit of time on this because DayTech were a very interesting firm at the time, right? Like there's something quite significant about DayTech, right?
Sure.
So, just tell us a little bit about like how that firm was run, just like what was the environment like there?
It was kill or be killed. It was, you eat what you kill. It was just very raw, aggressive speculation, and not unintelligent speculation because there were some really top-notch traders there, guys who went on to run tens, if not hundreds of millions for other firms. But at the time in this tech bubble, intelligent speculation was penalized, and I didn't have the greatest performance in that ramp up in the NASDAQ early period from 2000 to 5,000, just because I was a little too cerebral and I couldn't buy into something that really didn't have a business model or any prospect of ever making money, just because it was up 20 points on the day and was going to end up 30 points. I just couldn't buy those stocks that well. But the people who could, who could shut off that analytical side and just were great trend following traders, made fortunes. And I actually made most of my money, once the bubble popped, shorting a lot of those stocks into oblivion. But DayTech itself was really, like I said, it was the ultimate kill or be killed type of firm. They would give you as much money as you could utilize properly, with proper risk management and money management techniques. But they were also very quick to cut you back and or fire you if you couldn't perform. So, it was a very strange and wild cast of characters, which is, I'm sure you can imagine. I go into a little bit of detail in the book. Anytime you give 20, 21-year-old, 22-year-old kids, fresh out of Harvard, a couple of $1 million, $10, $20 million to play with, and these guys start producing, eye-popping numbers, it sort of warps your sense of reality. So, they would put contests together or offer people prizes for different exploits. And it became, almost like the Wolf of Wall Street in some ways, in that, money would buy everything. And whether it was the steak dinners or other types of, behavior designed to basically incentivize these traders and keep them loyal. It wasn't Wolf of Wall Street in that entire category of firm were creating stocks that didn't really exist and companies that didn't really exist and just trying to sell them to other people. In this case, we didn't have any outside money. We were trading just the partners' capital. And those partners were very wealthy people who, again, went on to found other firms. Guys like Jeff Citron founded Vonage and a couple of other tech firms. So, it was a extremely competitive, extremely high testosterone environment that produced, some people who were some of the best traders out there, as well as, others were very quickly eliminated and sent back to wherever they came from.
Yeah. And was there a high turnover of traders there? Like, did a lot of people come through the door and, not stick around for too long?
Yes, but not as high as you would expect. Again, because I think that bubble mentality, there were a lot of people who passed for genius. It's the old Warren Buffett quote, wait till the tide comes out to see who's really wearing any clothes. In this case, there were people who, the market was up every day. So it didn't take the greatest amount of technique skill or money management in order to make money. But once that bubble popped, there was a whole, I'd say probably by 2002, 85% of those people were gone.
Now, was there anything unique about the sort of trading that was going on at DayTech? Because isn't this the era where the SOS bandits came to be?
It is. And it, it became one of these things where these guys were deemed to be aggressive or the bad guys. But in reality, all they were really doing was offering some competition to the big banks. And the banks didn't like that. And, in America, it's kind of interesting how things are set up and that people think, oh, the SEC is there to protect the average investor. The SEC is on the side of the small retail client. That's not true. The SEC is there to protect the big banks. They're kind of like the crooked cop on the beat for the most part. And I don't think they're that way these days as much. But back then, they were there to protect the monopoly of, Merrill Lynch, Morgan Stanley, Goldman Sachs, and a few of those other firms. So when you had a firm like DayTech, and DayTech wasn't the only one, there were a couple other that weren't using the traditional big banks and keeping the spreads in stocks very wide or keeping the fees those banks would charge for a trade very high. I mean, back then to trade, in my Merrill account, I would pay $80, $90, $100 a trade, whereas the DayTech software that they created on their own, you could execute a trade for $5, $10. So it basically democratized the markets in a way that angered the big banks. And of course, they lobbied their friends at the SEC to crack down on it. And the SEC did indeed take a look at some of these firms and try to cite them or censure them. But most of the censoring that was done were wrist slaps because, it was really obvious that this was good for the retail client. I mean, think about Microsoft. If Microsoft, according to a Merrill quote, is trading by $25 by $25.50 with a giant 50-cent spread, obviously that's like a $500 tax on an investor. Whereas, with the SOS ability and the electronic trading that these smaller firms came up with, spreads shrunk dramatically, and that same 50-cent spread dropped to a nickel or to a penny spread. So not only were, investors saving on the $100 trade, but they were also paying a smaller fraction and not having to pay that extra $500 spread. So it was saving the retail client a tremendous amount of money. And in the end, the SEC, I think, gave up with trying to protect the oligopoly of the big banks.
And while you're at DayTech, just before we move off the subject, I'd love to ask you, are there any really memorable moments from working there? Do you have any wild stories to share? I know when I was skimming through the book a little earlier, there was a story about some guy being forced to shave his head because he was down on the day. Is there anything like that?
Yeah, so there was, I could give you a half dozen between, the contests of chugging milk or eating saltines, or, we had a party one year at the Waldorf that basically, was the closest thing to the running of the bulls that you've ever seen. We practically destroyed half the place, but the most, some of those memorable ones and the one you cite were just a perfect example of what a competitive, take no holds barred climate it was. So there was a trader who was not a great trader, but he had made some money, but, went through a period of struggling. And the boss of DayTech, walked out on the floor, and he kind of ran the firm like his own, private empire. And he basically told him, look, if you're negative today, and I think the guy had been negative 2 days in a row or something like that, but he said, if you're negative today, I'm going to give you a choice. You're either going to shave your head or you're fired. And this wasn't like, a guy with a buzz haircut already. He was a surfer type guy. So he had long blonde hair. And you could just see the guy cringe as it was said to him. And sure enough, that day he battled all day, but ended the day slightly negative. So the boss came out with the clippers end of day and said, make a choice, shave your head or you're out of here. And it's hard to say no to a firm where you've made in the past, anywhere from 10,000 to 50,000 in a single day. That's, it's tough to shut that gravy trough down. So he shaved his head, came in the next day and was negative the next day. And the boss ended up firing him anyway. So that was one example of just, the discipline and just the harshness of that environment.
That's savage. That's really savage.
It is.
So there must have been a lot of very wealthy traders who came out of this firm. Like, guys, if you're making like 10,000 to 50,000, some making six figures, $100,000 a day, like that adds up very quickly. Did these traders keep that money?
Some of them did. I'd say the most of them did. The better ones either went on to start their own hedge funds or, manage their own money and semi-retire. But there were also a lot who stuck around too long. And, if they built up a small pot of money and were trying to do the same trading styles and techniques, in the bear market that they used in the bull market so successfully, eventually they bled a lot of that capital. And, we were trading the firm's money for the most part, so you could tuck away your money. But again, if you're going to lose money on any type of consistent basis, the firm was going to step in and say, you got a choice, you're fired, or you can put up your own capital. And most people don't admit that either the world's changed or their style is no longer applicable. Most of them couldn't adapt. And would try to put up some capital, but eventually would lose that capital. So I'd say probably half of them lost a good chunk of it, but half of them retained it and either went on to do other trading ventures or employed that money in different ways. If you're smart, you moved into real estate or whatever else was out there as interest rates dropped and deployed that capital in a more intelligent manner.
Right. And how long did you stick around at DayTech for?
I was there, I believe, for about 3 years, and then moved on to a couple different hedge funds before ending up eventually making a decision in late 2007 to start my own firm.
Okay. So how did that go? How'd that come about?
So I had been at, again, probably 2 or 3 different hedge funds and had seen how they operate, seen the money they made. And some were impressive, some weren't that impressive, but I had always gone back to that prop trading model where you can charge a trader $10 a trade when in reality, we got a rate from Goldman of about $1, for 1,000 shares. So you could have a pretty big markup on that trade. And if you're a guy like me who is trading, 4 or 5 million shares a month and you have 10, 20, 30 traders trading that type of volume, that builds a really significant commission buffer to the point where, you could endure some really serious losses and not eat into your capital because you had that commission buffer. So I thought it was a better model than a hedge fund, which again is really just about asset gathering. And obviously performance has to match that, but especially these days, it's much more about just gathering assets and trying to match the market. So I decided to do a prop trading model. And, it was a good time for it because we weren't talking about small prop traders. We were talking about, during the financial crisis, a lot of these guys were trading for SAC Capital or Galleon or some of these other very big billion-dollar fast money hedge funds. And maybe these guys had double-digit returns for the last 10 years. But in the financial panic of '08, they were down double digits and lost their jobs. So, we were able to pick up a lot of these really talented traders for very cheap and get them to come work for us. And by the end of '08, we had something like 50 traders or so working for us. These were guys, I'm not going to say they were Derek Jeter, but guys like a Derek Jeter, where you didn't have to pay him a salary of $10 million a year. You just had to pay him based on the number of hits they would get, which is typically the prop model. You'll get 50% of whatever profits you make.
I might be missing something here, but it was technically a hedge fund though, right?
It was. It was structured as a hedge fund, but we also added a commission component to it.
Okay. So you were trading investors' capital, right?
Yes. So the primary, we had capital from RBC, Royal Bank of Canada, along with several other big hedge fund investors out there, had given us money to manage.
Right. So at your peak, how much did you have in the way of assets under management?
We were about $250 million.
Okay. Right. And what sort of trading were you doing there?
So we had it was a multi-strat model. So what we basically did is we tried to hire different traders, different money managers that had their own specialties. So, rather than having a pure energy book, we would hire 3 or 4 different types of energy traders. Maybe one guy was a utility guy. One guy may have been, a downstream type of energy guy. And then we also tried to just bring in other traders that were running different systems. So different sectors, we would obviously diversify. We had technology, we had, retail, consumer. So all of that. And then we had guys who's, would specialize in commodities or certain option strategies. So we really tried to have a very diverse mix of portfolio manager in order to give us that diversification.
Okay. Right. Now, I'm not sure when the best point to ask this question might be, but, at some point, from my understanding, it was almost out of the blue in some ways. The FBI came banging on your door while you're at home early one morning. When did that come about?
Very early. It was about 5 a.m. on in November of 2009. And, it would have been a pure shock to me, but for the fact that Raj Rajaratnam, who ran Galleon, which was a $7 billion technology fund, had been arrested 2 weeks earlier. And the way these things work is when you're arrested, there's something called a criminal complaint that's filed, and that's a public document. So when Raj got arrested, I pulled that right away because my partner in my firm had worked for Raj directly. He was sort of Raj's right-hand man when I hired him. And I read the criminal complaint, and it was during the exact time that my partner worked for Raj that these, insider trading allegations that the feds made against Raj took place. And I looked at, they even tell you what stocks, and some of the stocks were stocks I traded, like Hilton. Hilton Hotels, was a stock that they charged Raj with making, a lot of money on unlawfully. And this was a stock that my partner had tipped me as well and told me, he was buying it and a lot of smart people, his firm, were buying it. I, was concerned that my partner would get talked to by either the SEC or the DOJ, but I never imagined that it would have gone that extra step and that I would have become a target or a suspect in this investigation. But sure enough, I was arrested along with about 14 other people. I think there were 9 in our specific case. And it was a mind-boggling experience, to put it mildly.
Can you just go into that a little further? Like, what was it like when the FBI just came running through your house? Because, for most of us, that's something we'll never experience. It's just sort of one of those things you see in the movies. What was that like?
Sure. And, that's the opening chapter of the book. I think I try to convey just the shock and surprise of it all, and fear and terror that you have. I mean, at its base, they could have called me or called my lawyer or anybody else and said, we've got some information. We think, you're a suspect and we'd like to talk to you. And of course I would have come into the office or talked to them. I mean, one of the things that bothered me is I was arrested in this pre-dawn raid, and it was a raid. I mean, it was a FBI SWAT team with this flak jackets, probably a half dozen agents along with, canine dogs. And again, it was 5 a.m. I've got 3 young children. My wife is there. It was designed really solely to do one thing, and that's terrorize. So, when they came in, it was, hey, you need to talk to us. If you don't talk to us, you're not going to see your kids for 10 years. And, it's very much a show of force, with the flashlight in the eye and everything else, designed to get you to talk or to, beg for a deal or whatnot. And, I was just curious, what was the charge? I was a lawyer. I didn't just watch a lot of Law and Order. I went to law school and practiced law for a little bit. And they wouldn't even reveal to me what I was being charged with, just that it was some type of securities fraud. And, the dogs running through the house, and they had to search the house and everything else. And, all I could think to myself is, well, what are you searching for? The securities? It was a very big invasion, I thought, of privacy, and just done in a way, again, not designed to elicit any type of truth or anything else, but designed to intimidate and scare me into cooperating.
So that is why they did it, you think, is to intimidate you and get you to talk instead of doing something maybe a little bit more civil and just trying to give you a call and get you to come down to the office.
Yeah, they don't want you to meet with your, obviously consult a lawyer or anything else. I mean, in my case, they didn't even read me my Miranda rights. I mean, not that is a big deal. It's supposed to be a big deal, but it didn't matter in this case. It was just, flashlight in the eye, dog in the house. You need to talk to us right now, or you're going away for a very long time. You don't want to talk to a lawyer. Are you sure you want to do that? It's designed to catch somebody off guard. And to offer them that sort of, prisoner dilemma that you see in the movies of, hey, if you don't talk, somebody else is going to talk. And then, any deal or any way we could help you is gone. You got one chance to help yourself, and that's right now. And, again, it worked for several people in our case. I happen to know a lot of prosecutors and know a couple of FBI agents, and again, went to law school. So I know you don't talk in that type of situation because that's how prosecutors sew up a lot of their cases. It becomes your word against an agent's word. And, before a federal judge, who do you think is going to win that contest? So, they could say that you omitted information or obstructed justice or lied and committed perjury. So, we had been advised, or I had been advised and learned in law school and other places that, you never talk to people in that type of situation because what you say can be misconstrued and used against you. So, I opted not to speak, but there were 2 other people, at least in our case, who spoke, who I don't really believe either committed securities fraud. But, again, the FBI came in and said it'll be 10 years and they said, all right, well, what do you need me to do? Or what do you need me to say? And I think both of those people in our case made very bad choices, but their choices I understand, under that type of duress or coercion.
This episode of Chat with Traders is brought to you by TradeStation. When it comes to deciding on a broker, there's probably 1,000 different options you could choose from, but it's fair to say very few online brokers offer the services, the technology, and the tools all in one like TradeStation do. Actually, one of the tools TradeStation have recently improved upon is their mobile trading app. So now, when you're away from the desk, you still have advanced charting and studies, trade support for stocks, futures, and options, instant access to live data and market news, etc., all at your fingertips. Believe me, you're going to save yourself a lot of hassle if you can get set up with the right broker. So, Find out for yourself, are TradeStation a good match for you? Visit tradestation.com/traders to find out now and open an account to get started. Again, the link to visit is tradestation.com/traders. So even though they didn't tell you specifically what you were being charged for, all they said was securities fraud.
Securities fraud.
Right. So it's, that's pretty broad, right? Did you have a suspicion on why they were there though? Like, could you recall something which you think you maybe did in the past which maybe crossed the line?
I did. Not to cross the line, but I thought I was being arrested for the Hilton trade. After reading the criminal complaint and that Raj traded Hilton and he was being charged with insider trading on Hilton, knowing that my future partner had worked for Raj and had told me, again, he didn't work for Raj at the time, but he called me up and said, I'm buying Hilton. There's a lot of guys at my current firm, and he was at a different fund, who like the name here. They think something good's coming. I'm getting long a lot of Hilton. You should think about it. And I bought it based off that. I thought that's what I was being arrested for, which I thought was absurd, because that's the type of ambiguous tip that traders get all the time. I mean, I would probably get a dozen of those tips a week or more. Smart guys like this, or this analyst likes that. It didn't have the type of specific information or identify a source, a insider or illicit source that would have led me to believe that it was legal information. But I thought, in the financial crisis, these guys are making a big move to, punish some people, and they got Raj and who knows what else is out there. I thought Hilton was the trade I was being arrested for. And it turned out they didn't even charge me with Hilton, or they ended up thinking about it. But then when they looked at all of the information, they realized that there was absolutely no case whatsoever to be made for it. So they never ended up charging Hilton. It was a different stock, 3Com, that I ended up getting charged for.
And did you feel as though, still on that morning when all this was going down, did you feel as though there was a misunderstanding and that, this would all be worked out and you would, you'd be back at home later that evening?
Absolutely. But I also understood, Aaron, that, finance is different from anywhere else. So the mere hint of impropriety or loss of confidence in finance can be fatal. So I thought it would be okay for me, but I thought my firm would be done because I did think, look, if they're doing this to me, God only knows what they're doing to Zvi, my partner, the one who worked for Raj. And, if this is going to be a really big deal, and it sounded like it was going to be a really big deal based on the fact that Raj was paraded all over CNBC and all these other channels, and it was front page of the Wall Street Journal, New York Times, I knew that my firm was toast. In 8 seconds, I knew we weren't going to survive that. Even if, as I thought and hoped, my attorney would, come down and clear all this up, and they'd realize that, I wasn't given illegal information. I was given a sort of broad tip on a stock that was not unlike many of the other tips I had gotten in my career, and was well within my right to play that.
Right. So were some of your other partners raided at the same time as this was happening?
It was. They grabbed something like 5 or 6 other people, of which one was my partner. 2 were my partners. They were brothers. Another one was a passive investor in our fund, but he was a galleon guy who worked closely with one of my partners. And then there were a couple other traders that I was familiar with but didn't know personally that worked for another hedge fund.
Okay, so what happens after you're taken away? Like, what happens from that point?
So in this case, they bring us all to a holding cell, and it's, again, very surreal. And when they put you in this holding cell, I knew right away, that clearly it was my partner who was responsible to a large degree for this mess. He's in there. there's another 5 or 6 of us in there. And even though there's a red camera in the corner, meaning, recording everything, he's carrying on about, who's the rat? I can't wait to find who did this to me, blah, blah, blah. I mean, he's just running his mouth like, something out of the movies. And, talking to another trader about, who he thinks was, turned him in or was an informant. So at that point, I knew he was dead and responsible for most of this, and just tried to sit quietly and bide my time until they let us know. I mean, you're just waiting for them. And at some point they pull you in and say, here's the criminal complaint. And I remember reading the criminal complaint, and it just seemed very out of context, clips taken from different body wires or calls that were out of context and didn't make sense. And then a very small number in the criminal complaint. They charged me with making a $16,000 trade. And I was like, this can't possibly be, I can't possibly be being arrested in front of my family in a raid, my firm destroyed, my reputation destroyed over a $16,000 3Com trade, especially when 3Com was a stock, again, that my partners V tipped me on. But it was a very ambiguous tip of, smart guys I know at this fund are buying it. I like it. It was in the Wall Street Journal the week before saying this stock is in play. Wall Street Journal even had the acquirer, Bain Capital, the bank, Goldman, and the price, the eventual price it would get acquired at. And then it didn't get acquired for another 2 months or so. So it was all just very hard to believe that this entire thing was happening over this one trade. But, another 5-6 hours, you get arraigned by a judge. They set a bail. In my case, I think it was $250,000, which I was fortunately able to make. And then you go home at night and try to pick up the pieces of your life and figure out what's going on.
Why was this happening? Like, why do you think this was happening? Like you said, the criminal, what's the word? Criminal complaint? Is that the word?
Yes. Yep. Criminal complaint.
It stated this was all over a $16,000 profit, which is very minimal in the scheme of things. Why do you think this was happening?
I think, there's a couple reasons. One, and they did end up adding some other trades, some other 3Com trades to that to get that number higher. But I think point blank, what you had was, a very bad financial crisis. And you had basically a very angry public, and rightfully so. And then there was a deliberate decision on the point of either, the Obama administration or the Southern District U.S. Attorney that he would go after a lot of these hedge funds or traders for insider trading, because that's kind of, it's easy headlines and these are easy money. It's a very simple and convenient narrative that you can sell to an angry public that, hey, we're on the case. We're doing something about the financial crisis. This stuff's never going to happen again. You'll never lose your home again, and your money is safe in the bank. So you have this sort of preordained storyline, and a lot of cases were then chosen to fit that storyline rather than a real investigative approach that might have yielded some real targets and real reform. I mean, by going after insider trading, the total, I think, losses, and they're not losses, they're actually gains, there's no victims, were maybe in the order of $100 million or so. Compare that to the trillions of dollars that were lost from mortgage fraud or some of the other, bad actors and bad actions that took place during the financial crisis. So I think it was a deliberate choice. And then I think you also had an environment where, prosecutors want to get those scalps so they can get their 7-figure jobs when they leave the office. And these are very easy cases to explain to the public. Everybody's seen the Oliver Stone Wall Street movie. Everybody knows you're not supposed to do insider trading. Nobody really understands what it is because it's never been defined other than when it's really obvious. But you have a lot of these prosecutors and agents who don't have any real finance experience. They're lawyers or, they were English majors. They didn't understand trading or math or the difference between bond or equity or anything else. So you had a lot of them come in and sort of say, all right, here's the guy telling him to buy this stock that he thinks it's a great buy or whatnot. and this guy knew it was coming from an illicit source. Therefore, 2 or 3 people removed from him, he should have known it too. And that's not the case. And that had never been the way these cases had been looked at or prosecuted. And it took, unfortunately, another 4 or 5 years before the Second Circuit and the Supreme Court really sort of spanked, the U.S. attorney as well as one particular judge, which just happened to be the judge I got, unfortunately, who was a rogue judge, that he was applying the law wrong. I mean, they were omitting entire elements of the law in the jury instructions, the ability to find knowledge and that there was a benefit exchanged. Our judge took that out of the jury instructions, and something like 3 or 4 or 5 cases after mine all got overturned because they applied the wrong law.
In some ways, if your partner hadn't have previously worked with Galleon Group, you might not have got caught up in this mess.
Yeah, I mean, there was, it took a lot of different, unlucky coincidences to make that happen, but he was clearly a guy who was trying to do things that were wrong. When a guy is trying to find somebody who knows a lawyer or bribe a lawyer, that's illegal and that should be punished without a doubt. But what I disagree with was they then took that particular person, and when he tipped some other people, he didn't tip some other people saying, hey, I'm bribing a lawyer, here's this stock we got, because he wants to sound like a smart person himself and was selling himself as a brilliant trader and analyst. It would be, I'm a connected guy, my hedge fund friends are telling me this, or I've done some work and I think it's this. So he would always portray it as, I'm talking to smart money guys and they're telling me this, I'm getting law on that. Not, I'm bribing a lawyer and here's what he's telling me. And again, the feds came up with this theory, which is legally incorrect, that somehow when you trade a stock, you have to verify where that stock came from and then go down the line, the entire chain, each level, and verify that it was, not illicit or that it was a legal trade. And that's never been the way the law has been or how it's been implemented. I mean, think about, I don't have the ability to independently verify either the sources or the intermediaries. If I said to him, I need to know the name of each of your hedge fund friends, I need to interview them myself and confirm where they got it, he would look at me like I had 3 eyes, as would anybody else in the industry. It's in this industry, it was very much a swim at your own risk. Like you could either make the trade or don't make the trade, but I'm telling you what I'm telling you. I'm not going to let you talk to people in my network because then, I could cut him out of that network. But in the Fed's mind, it was, by not saying, hey, I need to know exactly where this trade came from and speak to these people, that I was somehow conspiring with him. It was a very big stretch in the law, in my opinion. And that opinion was backed up by the Second Circuit later on.
And what was happening to your fund during all of this? Because like you said earlier, obviously your reputation was damaged at that very point that you were raided. You had $250 million under assets. What happened?
Yeah, the fund, as I mentioned, ceased to exist about 8 seconds after I was arrested, for all intents and purposes. They did put us on CNBC and frog marched us out in front of reporters. And when that happened, Goldman, who was our prime broker, basically froze the assets and sold them off in a way that was probably very advantageous to them. So, whether it was a market sell for a very big number and then they were on the other side of that trade or not, in liquidating the accounts, a lot of partner capital was wiped out. So the fund was gone literally by the time the markets opened up that morning. Not unlike, if you remember Diamondback or Level Global, when 2 different traders were arrested there, and the feds did a raid just to get documents. Both of those funds, which were, $6-7 billion funds, both ended up shutting down just again because of that appearance of or a cloud that was hanging over them. So in finance, it's almost impossible to survive any type of serious investigation, much less, a dramatic FBI raid of the 3 main partners.
Just so I understood that correctly, pretty much by the time the market opened that morning, your fund had been entirely liquidated.
Correct. It was done.
But you hadn't been found guilty at that point. So how can they force you to liquidate your entire fund? Like, how does that work?
Yeah, I mean, sadly, I think the presumption of innocence, and a burden of proof on the government to prove, guilt beyond a reasonable doubt, those are sadly more Hollywood fiction than reality. In my case and many other cases, the government can freeze your assets. They can lock you up and prohibit bail so you can't defend yourself. They can do a host of things in order to make it impossible to get a fair adjudication of your case. And in this case, again, Goldman or whoever the prime broker was, these are private parties. They're not government actors. So they do have the right, likely underneath, whatever documents we may have signed to get the account set up or whatnot, to take control of the accounts and liquidate if they felt there was a need, or if there was some type of, perhaps there was a moral turpitude clause or something like that. But it was done in a way that was, again, very unfair and should have been done in a more orderly manner as well in order to preserve, investor and partner capital.
Yeah. Wow, that's incredible. So what was the trial process like? How long did that drag out for? I mean, I presume it was also quite an expensive exercise for you to go through, right?
It was. And that's, again, one of the things about the criminal justice system that people don't really understand is, everybody is used to watching Law and Order. They think it's over in 40 minutes, from start to finish. So in my case, I made the decision, shortly thereafter my arrest, my lawyer made a pitch to the feds to drop the case because there was not adequate evidence and they felt, it was wrong for me to be arrested. And the feds, after a little more investigation, came back and said, look, we realize your guy is a peripheral player at best, but how about this? Let him plead guilty to one count of conspiracy. So no actual insider trading, but conspiracy to commit insider trading. And we'll give him probation, no jail time. And that's obviously a very different offer than, talk to us now or you'll get 10 years, which the feds, made when they came through the door. But I think after they saw that the evidence was extremely weak to non-existent, and they probably misunderstood some of the case and investigation, they came back with that offer. And I was stubborn and didn't want to take a deal and didn't think I did anything wrong and told them, no, I'm going to go to trial. Now, obviously, I handicapped that pretty badly, despite being a lawyer. In law school, we're taught that it's an objective, fair adjudication, that, both sides present their arguments before a neutral judge and a jury of our peers makes a fair and informed decision. That's obviously not how it really plays out. But it took something like almost 2 years before I got an actual trial. And then instead of getting my own trial, they put me on trial next to the two brothers, the one who had worked for Raj, who was incredibly guilty on his face and had no business going to trial. And they literally sat the three of us together and said, partner, friend, partner, friend. So it was a very big guilt by association case. And again, we were tried probably 500 yards from Zuccotti Park, which is where Occupy Wall Street went down. So this is the height of the financial crisis. This is, when anger at bankers and finance guys is at its peak. And I knew during jury selection that I was dead on arrival. I mean, the judge, sort of during jury selection said, how many here have a negative view of hedge funds or Wall Street? And the joke I make is you would have thought he asked who wants a free iPad, the way people's hands shot up. Probably, 9 out of 10 people raised their hand. And it had also been, sadly enough, Raj had been convicted himself the Thursday before our trial. We were on trial Monday. And so during the weekend in the Wall Street Journal, New York Times front page was pictures of Raj and then pictures of us and, saying Galleon Trial Part 2 and linking us to Raj, who at that point was basically a financial Lex Luthor, the most guilty person on the face of the earth. So you had overwhelming prejudice and bias existing at the time. And a judge who, again, I believe was a rogue judge and complicit with the government and let them get away with literally anything they wanted to do at this trial. And, it wasn't until a couple of years after that, a better lawyer than I had came up and challenged the judge's rulings in several of these other cases. And those cases all got overturned that had identical facts and basically identical incorrect jury instructions. But unfortunately, I had already been convicted and had already served, my time in prison.
So what were you actually convicted of? Because you said that you were offered, I think it was a plea deal, right?
Yep.
Yeah, so a plea deal for conspiracy and, no jail time would be served, but you went to trial and you didn't accept that. What were you actually convicted of?
I ended up getting convicted of 2 counts of insider trading, both in that same stock 3Com. So 2 counts just means one time I bought it and then sold it, and then one time I bought it again. So I basically ended up getting convicted of 3Com, insider trading, and then conspiracy, which is a catch-all that they throw out there. And I got sentenced to 30 months in prison after that.
30 months, okay. And these 2 trades, so that I remember you mentioned $16,000 earlier on. I presume that was just for one trade. What was the other trade worth?
They ended up adding some other trades in there, and the total trading, I think that they ended up charging was about $160,000 or so. And again, in a prop format or prop trading format, I wasn't at my fund at the time. This is when I was at a different hedge fund, so I had a 50% payout. So I really made off the trade about $80,000. So after taxes and everything else, it wasn't a big amount. And I was running, a $20 million pad at the time. So I ended up settling the case with the government for $30,000 is, sort of what they felt was the amount that I actually ended up taking home. So not $16,000, but certainly not much more. And for that $30,000, I ended up getting 30 months in prison. If you compare that to, let's say, the big banks who were fined something on the order of $400 billion, that's billion with a B, and virtually not a single person went to prison, or Phil Mickelson recently in a case, was cited for making $1 million in illicit gains, and he wrote a check for $1 million and gave it back to the government and didn't even get prosecuted. So, if there is any lesson, it's that it helps to have, political clout or friends in high places in these types of cases.
That's incredible. Man, I can't believe you served 30 months over essentially $30,000. That's ridiculous.
Pretty crazy, right? Especially when, at the time I had the fund and had sold a piece of the fund for about 8 figures. So, the fund itself, and the amount of money we were managing and everything else and employing 55 people, again, I do think there's something called pot committed, which if you play poker, it's, you put so many chips into the middle of the pot that you almost have no choice but to play the hand out. In this case, had the feds or the SEC come to me before the arrest, before it was on TV and splashed in the papers and everything else, and allowed my lawyer or myself to make the defense of, what they thought I did and what I actually did, I'd say there's zero chance I would have been charged. Certainly, this case would have never been brought today. It would have never been brought in 2003. And there was a lot of things that happened at trial that make me believe that but for the judge we had, Judge Sullivan, who, again, is a bit of a lunatic, any other judge probably would have dismissed this at the summary judgment stage or have given some type of probation sentence or a very minor sentence. But he happened to be a very, law and order, hard on Wall Street type guy trying to make a name for himself. And he sentenced my partner, who again was a bad guy, but nobody lost any money. He sentenced my partner to 10 years. There's cases in the U.S. where people try to throw a grenade or try to shoot somebody and they get 5 years. To get 10 years for what amounts to a victimless crime is a pretty serious sentence. But again, he was breaking the law and deterrence is necessary. And it was during the financial crisis. It made good headlines. So I understand the sentence. I just think it was a little bit excessive.
So what was it like going into jail? I mean, walking into the prison, what was that moment like?
It was twofold. One, it never stopped being surreal to me. I still was getting over the trial where, as part of the trial, we called as our only defense witness the lead FBI case agent. That was our only defense witness. And my lawyer asked him, can you point to one email, one body wire, one wiretapped call, instant message where Mike Kimelman has passed inside information and trades on it? And she, after hemming and hawing for a bit, admitted no. That's the type of thing in my mind, or at least in the movies, where, the judge bangs the gavel and the case is kind of over. But again, not in this environment, not before this judge. There was a FBI informant, it came out, who was sitting next to me on the trading desk for 18 months, literally, 2 feet away from me on a trading desk, who I thought was my friend, but he was actually an FBI informant. And he was wired up every day trying to incriminate me in some type of trade or some type of scheme. And the feds didn't even call him at trial. And we wanted to bring that fact into the case to say, hey, you guys had an agent sitting next to him for 18 months wired up, and you didn't find a single, piece of evidence that was incriminating. Like, that should be implicitly say that there was a lot less going on than you think there was. But we weren't allowed to bring that evidence in. So there were a lot of different things that were still grating on me, but at least walking into prison, I knew that I could start marking the calendar. I could start, figuring out what to do with the rest of my life. And that at a certain point, I'd be able to go home and see my kids again and be their father and figure out, the second half of my life, despite, having had my reputation, my freedom, my liberty, my money, and everything else taken from me. So I was scared only because it's a pretty intimidating environment. But I was also excited to some degree that the uncertainty and that the limbo, of years pre-trial and what am I going to get as a sentence, again, the government offered me, like you said, that probation plea if I took the plea. But once I got convicted, the government was trying to argue for 5 years. So, it's a pretty big change. And even the 30 months is a pretty big sentence just for exercising, your right to go to trial. Supposedly you have a constitutional right to trial. The judge was aware that I was offered probation, but, decided to give me, a sentence that was dramatically longer than that probation sentence. So it was twofold. It was fear, but it was also a little bit of, relief and excitement that the end was possibly in sight.
And what sort of prison were you sent to? Like, who were the cellmates and inmates who you were kind of put in with?
So this is a big misconception everywhere. Everybody says, you probably just went to a white-collar prison. There's really no white-collar prisons anymore. There were perhaps a few back in the day, and there might be one or two now that are a little bit softer. But because of the war on drugs and because of, cutbacks and whatnot, all prisons are pretty bad. This was a minimum security prison, so it wasn't nearly as bad as, heavy barbed wires or guards with guns. There were no fences, but, I'll give you an idea. The population was probably 500 people. It was probably 200 black inmates, 200 Spanish inmates, and maybe 100 white inmates. And out of all of those, maybe 25 white collar. Because most people are in prison these days because of the war on drugs. And that war is pretty indiscriminate, and they scoop up a lot of people and they give them insanely long sentences. So there were people I was with, who had, what's called a skid bid like me, which is only 30 months or 24 months. And then there were plenty others who had been there for 10, 15, 25 years. So, it's a large mix. Minimum means, people are supposed to have less than 10 years left on their sentence. So you do get some people that have worked their way down from penitentiary level who might have been in for, murder or bank robbery or kidnapping or something else. But for the most part, it's a lot of people who just want to go home at that point.
Okay. And what was life like for you in prison? Like, did you have any run-ins with anyone, or were you fairly well looked after? I mean, how'd it go?
It was rough, especially in the beginning. And I talk at length about it in the book. that the Bureau of Prison, in its infinite wisdom, decided to put those two brothers that I was partners with in the same prison. And these guys, or at least one of them, he was so deranged and angry over his 10-year sentence that he sort of blamed me for that 10-year sentence to some degree, because I went to trial with him. And at trial, I put on in my opening statement a whiteboard that basically said, out of the 14 people in this case, there's only one of them who didn't have a prepaid cell phone and who didn't pay any cash bribes. And the only person is Mike Kimelman. In his mind, that made him look more guilty, which I'm sure it did. But at the same time, he didn't get convicted because of that. He got convicted because there was 500 hours of him on tape saying crazy things like, if we get caught, we're going to go to the big house and, don't tell anybody X, Y, and Z, as well as 7 informants that came forward and pointed to him and said, no, that's the guy who paid me a cash bribe and told me this. So, he was guilty as can be, but with no one to lash out at except me, he took out his anger on me and came after me in the beginning when we were both there. So I was on my heels and obviously had to watch my back and had a very rough time for those first few months before I knew enough inmates and knew enough people that I was able to, steer clear and protect myself.
Okay. So it was mainly someone who you already knew of, right?
Yes. If it hadn't been, likely it would have been a lousy experience, marked more by boredom than any type of habitual violence. There is violence, but limited violence at a minimum security level because they have a zero tolerance policy for it. It's not until you go up in levels to a low or a medium that you start to get, sexual assault and really rampant violence. But you hear the stories, and I saw, several episodes myself while I was there. And I do think the American prison system, I don't think the average American would allow it to exist in the form that it's in if he had any real understanding of what it looked like or how it was set up. It is a, pretty barbaric place, and guards have absolute power, and there's a tremendous amount of corruption on all sides, and it's really, incredibly punitive, and it's supposed to be punitive. I know you broke the law, you should pay a price, but there's zero rehabilitative aspect to it. So we can't be surprised as a society that we have a recidivism rate of about 66%, meaning 2 out of every 3 people that go through the prison system end up back in prison within 5 years. And if you think about, the societal, the moral, the financial cost of all of that, it rises into the hundreds of billions of dollars, really, because we have done zero training or rehabilitative, implemented any of these types of things that we could easily do for very little money that would give people a better chance of succeeding on the outside once they're released.
Yeah. So what would you say are some of the things which shocked you the most about life in prison?
Just that there are, one is I think they are warehousing a lot of mentally ill people. And I don't know if that's a budgetary constraint or whatnot, but there was a significant portion of the population that had clear mental health issues that needed help and medication. And were probably just a little bit of help or medication away from being normal, productive citizens, but never got that help. That shocked me a bit. I think the other major factor that I saw, and I think society pays a pretty big price for this too, is that addiction or substance abuse plays such a huge issue. I'd say something like 80% or more of the people that are in there had some type of substance abuse issue that may have led to them either directly getting into prison or clouding their judgment and making them do things or not seeing what the right path was. And again, a very expensive way to treat addiction, which I do think is a real problem. I mean, if you have cancer or diabetes, you get real treatment. Nobody or something like 1 out of 10 people who have an addiction problem get any real help for that addiction. So I think if we intervened earlier in some of those cases and offered people help and treated addiction as a mental health issue rather than trying to criminalize it and punish it and put people in prison, separate them from their families and remove their ability to get employment or housing or anything else later on, I think it's a very, very bad policy. I think the war on drugs has been, probably the worst public policy we've ever had in this nation, at least in modern times. So that part shocked me as well. And then, two other things where I found a large chunk of people who were just like you and me, who were everyday, normal people who made a mistake and admitted it, or got caught up in something, as well as probably 10 to 15% of the people there I thought were innocent and were either part of some other bigger conspiracy or got scooped in a big net. But there was several innocent people as well. And then I think, there's the flip side of that is there's people who life is just really cheap too, and don't really care about anything, lacked total impulse control. And that and the corruption of, I think, the guards and the administration, I thought was kind of shocking. It's probably Piper Kerman, who wrote Orange is the New Black, said it best. It is the greatest mismatch of power that exists anywhere in the United States and possibly the world. I mean, you have a guard who can do or say literally whatever they want, and an inmate who has zero rights whatsoever, zero right to, to appeal a decision, zero rights to do anything. And it's in some cases almost worse than modern day slavery as far as rights, because we obviously don't have any, say in anything. And our rights are solely derived from what the guards and the administration say we can do. So it's a pretty barbaric existence.
Yeah. No, it's not good, man. And where was your head at, like, during this time? Like, was it a depressing time in your life for you, or did you manage to stay somewhat positive throughout it?
Once I got past the initial, partner drama, I was in a decent place. I mean, I had gotten sober, which, not that I was an out of control alcoholic. If anything, I was certainly highly functioning, but I had been drinking far too much. I had probably been drinking heavily since I was 15 or 16. After 9/11, turned that up a notch. After the financial crisis, another notch. After the arrest, another notch. So really, had an issue that needed to be confronted, and it got confronted on that level. So in some ways, it was a blessing. So to be clear and clean and sober for the first time in 20 years plus was something that felt nice and allowed me to get some perspective on what I went through, on what I still had, and to see that I still, was in many ways blessed with 3 healthy children, great friends and family, and then start thinking about what I wanted to do the rest of my life and how I could possibly have an impact on others.
And so did you end up serving your full 30 months? You didn't get out any earlier?
I ended up serving 21 months. I was able to knock some time off through good behavior and through going through a substance abuse program in prison that allowed me to do 6 months in a halfway house as well. Okay,
so what's a halfway house look like?
Well, this one was in the Bronx, and I don't know if you know anything about the Bronx, but it's a bit of a rough area. And the joke I make is the only thing worse than a Bronx halfway house is prison. So it was a pretty rough. It was a pretty rough environment. It's like a 5 or 6 floor walk up, really bad shape, run by, again, corrupt people who have zero interest in, what your best interest is. They're just sort of running out the clock on their job and have the ability to mess with the inmates or the halfway house, residents. And, again, you wouldn't believe it unless you saw it with your eyes. I mean, the whole point of a halfway house is to help people adjust to society and to re-enter society. And it's almost the exact opposite. I mean, you can't, there's no computers. There was one phone. You had to wait in line to use it with quarters, with a dozen inmates in front of you. You had to make an appointment if you wanted to go out to try to find a job or to take an interview. You had to give 48-hour notice. So, imagine there was one guy I was with there who was like a chemical engineer, mechanical engineer, the best resume you've ever seen. But what was he going to do? He couldn't produce a resume. If he got a call back from and a firm that he interviewed with, he had to rely hopefully on an inmate to answer the phone and take a message. They made it in a way that was all but impossible to gain productive employment or to re-enter society, which is really the exact opposite of what it's supposed to do. So again, just really a silly, backwards environment.
Wow. Okay. So what's life like for you today? What are you doing these days?
These days I'm doing several things. So when I got out, I started some real estate investment. I had invested in some properties and some fix and flips back when I was in law school, and had those skills, having been, an M&A and a real estate lawyer, and understood how to look at investment. So have done a lot of deals on that front, and then also put some time into finishing the book, got the book done, out and published. Have been speaking at different events as part of the book, and have now also been doing some coaching, some high-end personal growth coaching related to the book, and some of what I've gone through and overcoming adversity, and how to align, yourself properly to overcome those types of obstacles. And then more recently too, in the last year or two, there's been two sectors here that have been really sort of a paradigm shift in the U.S. and globally that have shown tremendous growth and are almost disruptive, and that's the cannabis industry. I've been making some investments on that front, mostly on the medical therapeutic side, which I think has tremendous ability to confront a whole host of afflictions in an organic and more natural, with less side effects manner than a lot of the existing pharma applications out there. So have been looking into investing and consulting on that front, and then have also been active in cryptocurrencies for the last couple of years. I have a close friend of mine is a bigwig in that industry, and we've recently been putting together a product, a newsletter product, as well as a trading product in that sector that we think is really sort of cutting edge and different and adds a lot of value. So we've been taking, a lot of the private advice we've been giving to clients, and we're going to roll that out on a more broader scale, open to the public.
Okay. So you haven't been entirely scarred from financial markets.
You know what? I was up until recently. I do think, in this case, especially with cryptos, again, the regulations aren't clear, but there's nothing preventing me. There never was anything preventing me from managing my own money or somebody else's. I just couldn't register with a firm, like a Goldman when you have to register with the SEC. So, I didn't think it was an issue.
Right. All right, Michael, well, let's leave it at that for now. Man, I have to say, thank you very much for doing this and being so open and sharing your story. I mean, it's certainly been a wild ride, and I'm glad, a lot of the drama's behind you now, so I hope better times ahead. But yeah, thank you very much for coming on the podcast, Michael.
Thank you, Aaron. Read the book, get the book. I think you'll enjoy it. I think your readers will enjoy it. And or check me out on Twitter, Mike Kimelman, and look forward to hearing from some of you guys.
Yeah, if someone does want to pick up a copy of the book, where's the best place to get it?
Amazon usually, or any bookstore, but Amazon, Confessions of a Wall Street Insider, easy to get electronically or hardcover.
Okay, and you're also on Twitter. What is your Twitter handle?
It's at Mike Kimelman, 1M.
Okay, do you just want to spell that out?
Sure, MikeKimelman.
Very good, man. All right, we'll enjoy the rest of your evening, and let's talk soon.
Sounds great, Aaron. Thank you.
You've reached the end of this episode of Chat with Traders, but rest assured there are more episodes loaded with real market insight and zero hype on the way soon. So to stay updated with each great new release, subscribe to the podcast in iTunes, and we'd love it if you'd leave a rating and review. We'll catch you next time on Chat with Traders.